Okay, welcome to the Swing Trading with Cycles channel. We're going to do our update on Euro Stoxx. Today we'll focus on the Stoxx 600. We'll also look at the DAX if we get a chance. We'll also look at those ratio charts, see how they're performing relative to the S&P 500. As of last time we looked, they were starting to outperform European stocks, that is, with DAX at the sort of forefront. And so we'll see if that condition is still the case. This is December 17th. It's a Saturday. We just had the last Fed meeting of 2022, and we also had the last CPI print of 2022 in the U.S., and things look bad, right? Like, it looks like we're moving into, a weekly cycle, like we've started a weekly cycle decline, and that's for U.S. stocks. Definitely take a look at the link take a look at the video detailing that. Massive sell signal. Now, as it turns out, we really got pretty much the same sell signal across all markets, and we'll talk about that. That's our sell signal for Stoxx 600. So this is the chart of Stoxx 600. Yikes. So just to orient you again, this chart here, upper left-hand corner, is a daily. On to the right of that is your weekly chart. This is your monthly. I'll flip that over to monthly. And then this chart here is your quarterly, and then we'll also look at some ratio charts. So first off, let's start with the weekly. And we'll actually add some cycle counts to this to help orient ourselves. And so, like in the last video, and if you haven't seen that, definitely take a look at the link in the description. I go into more detail, look at longer term charts. This is more of an update, so definitely watch that for like the bigger picture. This is more of a where do we stand now, right? So we were having when we had this video last, we were having this furious rally, and I called out, that's why these arrows are here, that we've been making lower highs, right? That high is lower than that high. This high is lower than this and lower than that. And so now it's a question of, are we going to make a lower high here and just kind of continue the trend? What we ended up doing, or what we're doing, I should say, we're in the process of it right now, is we did make a slight higher high, right? Now, we then proceeded to fail. So this, to be very clear, this is your weekly candle from this week that just closed. This is a bearish outside candle, which means it makes a new high. So it made a new high above last week, and then it can't hold that high. It gets rejected, and so it goes from green to red. That's how it works, right? Because in order for it to make a new high, it had to be green. So it was green. It was looking bullish. It was looking great. We had a pretty tame CPI print in the U.S., and then we had a big reversal. And notably, the ECB central bank president, she was actually even more hawkish than Powell. Like, we're going to raise, we're going to continue. So basically trying to redouble their commitment to fighting inflation, or at least show people that they are. And so we may see a world where Europe actually starts to underperform the U.S., even though it had started to outperform, because it's almost like the ECB feels like they need to play catch up. So what does that mean for cycles? And if you're not familiar with cycles, definitely take a look. There's some links in the description. I've created a ton of content around that. Incredibly powerful tool for helping you kind of orient yourself for the markets. So let's just think about this. Where are the major swing lows? So let's start with this one. This is our 2020 March low. That's an easy place to start. So this was the start of a new weekly cycle, which went for 32 weeks. And then we had another weekly cycle, which went for, this is a really long one, 49 weeks. And notice they don't have to be the exact same length. That's not how things work. Nothing works exactly like in the in the real world. This was a cycle of 22 weeks, right? We had our low on this week. Then we started another new cycle, had a very early top, and we made our low. And that was a very short cycle, 15 weeks. That was a cycle that was for the QQQ, for like the NASDAQ, that was a 16-week cycle. So we have been having these shorter cycles across equity markets, and that was 13. So interesting, you could just say this is one cycle of 27 weeks, right? Like, you could make that argument. In some ways, it doesn't really matter. It's like, is it one really big bearish cycle, or is it two smaller but also bearish cycles? Like, in some ways, like, who cares, right? So let's just say, yeah, that would be 30 weeks. Is that your low? Let's see. Right, so your low was on this week. And most importantly, where are we now, right? We're in a new weekly cycle. We're in a weekly cycle. Last week was week 9, right? So let's just say this cycle goes for, let's say it's a shorter one. Let's just pretend, and it goes for 20 weeks. So what do we know? We know that this looks like it's the top of this weekly cycle. That could change. We could get a massive reversal in the other direction. But right now, if things don't change, this is the top. This is a double top, false breakdown. That is week 9. Think about the math on that. That's not good. If we're making the high for the weekly cycle on week 9 and the weekly cycle lasts 20 weeks, and that's just spitballing, right? It could be shorter, it could be longer. That leaves you a lot of time to decline. And it won't happen in a straight line. We're going to get bounces. That's how price sort of moves, right? It'll be something like that, right? Like that. We'll get these little rallies, these fake outs. You want to not be faked out by these little lower highs, right? So that, and just to put a finer point on this, for this cycle, which was 21 months, the top was on weeks. Sorry, I keep saying months. Was on week 13. Right. For this cycle, the top was on week 1, 2, 3, 4, 5. Is that a double top? 464, 464, 11. Yeah, that's a pretty brutal double top. So 2, 3, 4, 5, 6 on week 6. I'm marking these because it's just giving you kind of context, right? So you had a cycle, like this was a cycle very early in the year. This is the one that started the downtrend. I'll delete this now, right? We peaked on week 13 and started this downtrend. We made this low, then we bounced for 6 weeks and then made another low. And now we've bounced for 9 weeks. And the expectation is we're going to make another low. I would expect below this one, but we'll take it one cycle at a time. Now, that's what the weekly cycle tells us, or the weekly chart. And obviously, whatever is going to happen on the weekly chart is going to happen on the daily chart first, which is to say, if the weekly chart, for instance, is going to, like the weekly chart is incredibly bearish right now. It's projecting a move. It's suggesting a move lower. If we're going to get that move lower, it's going to have to happen on the daily chart, right? And so the same way we just counted out the cycles on the daily chart, there are cycles on every level, and there are also daily cycles. When we last reviewed, when we did the last video, we had made this swing high on day 23, right? So is that like that, if that's your cycle low, right? So that 23, and then since then we continued to rally, right? And so we've now made a high on day 43. This is very similar to the count on the S&P, which is not surprising, right? Markets are kind of moving in unison almost, right? So we have a pretty late daily cycle high, which means that the daily cycle is very right translated, which is good, which is a positive thing. But it also means we're now declining into a daily cycle low. So this was day 40, this top here, this big candle, and that's what created the bearish weekly candle. You have this bullish, this daily candle that used to be bullish, and then it pulls back. We get an inside day the next day, and then wham, that's the Fed day on Thursday, and then that's follow through. And Christine Lagarde, the ECB president, talks on this day on Friday. So this is just day, what is that? Day 44, 45, 46. So we're on day 46. The good news, and again, this is a similar thing for the S&P, is that we're late in the daily cycle, so you'd expect that we're going to get the daily cycle low soon, right? Like maybe if this wasn't already hit on Friday, right? So let's just say we get like a few more days down, and then the expectation is that we would get a bounce, but that we don't get above this high, right? So like, let's say we bounce, and I'm not saying we would get a double top necessarily, but the expectation would be we make another run at that level, and then we fail, and then we begin a downtrend. So that's the weekly cycle decline we just talked about, right? But like if you're paying attention, although I'm saying we're starting a downtrend on the weekly chart, we're probably going to get a reversal on the daily chart first to get ourselves a little rally, right? So that's important. This is why you don't want to like short in the hole. You want to make sure that you're picking your spots. So, the safest thing to do, if when we're inclined to go short, obviously the more conservative thing to do, which is to get out of the way, is you wait for this thing to have its little rally, and then you get out, you short like here, right after the confirmed swing high. And if you think about other rallies in this downtrend, right? Like this little rally lasted 16 days, right? This little rally was more like 22. So like it gives you a sense. The idea is you're not going to get the expectation is you wouldn't get like a 40-day rally, but you could get a sense of like what some of these shorter ones were. This is probably like a 15-day rally, that kind of thing. And if you think about what that means for the monthly chart, this is the same pattern as the S&P 500 and really all markets. We made a higher high. Like actually, just to be clear, we talked about this right at the outset of the beginning of the video. The thing that's so bearish about this weekly candle is it's the bearish outside candle. So it made a new high and it also made a new low. Another way to think about that is it's a false breakout. And you can see this is your false, like on the daily chart, like this is your false breakout. Like we got punished by getting long up here, it just sold off. And so we're at risk of this monthly chart doing the same thing that the weekly did. It already made a new high, right? Like again, this made a new high, and then what did it do? It made a new low. So we already completed the first step. We made a new high and we've gone red. So now do we make a new low? And the low for this month would be 405.95, so call it 406. So still a good distance down there. The other thing to be aware of is just because we may not get that candle for December. Like we may not make that low in December. Maybe it's the December candle that kind of finishes the job. So it's not like, oh, well, if we can close December and we don't make that low, we're good. Not necessarily, right? So good to be aware of that. Before we go to the ratio charts, let's just look at the DAX real quick. I'm pretty sure it's the same count, but like let's double check. So yeah, we had measured. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So this is week 11 versus the Stoxx, which is week 9. So this kind of bottomed first. This is stronger. But it's the same idea. Big bearish outside weekly candle. But notice we stayed above this low here. This was a really big rally week. So the week of November 7th. Also the week that we went materially above the 200-week moving average is what this yellow line is here. So that's important. So that level is right around 13,386. So we're going to see it's like another 500 points below there. So that's going to be interesting. And that corresponds to so that would definitely make a new low on the monthly chart. Interesting. And same kind of idea here on the daily. We are moving into a daily cycle low. This was our high. Let's see what the count is here. So let's call it boom to boom. So 53. So this is really long. So again, maybe we don't get a really, really long decline because we've already had a pretty long cycle. But you would expect that this is going to be left translated, just like we talked about for the Stoxx 600. If we are moving into a weekly cycle decline, it's possible that we're not. We could always get a reversal here. This just has odds that favor a move lower. And if we look at the ratio charts, this is your yearly chart. So every candle is a year. Big picture. And on the right hand, so that's the absolute chart for Stoxx 600 on the left, and then on the right you have the Stoxx 600 divided by the S&P, and you can see we're green for the year. We talked about this in the last video, and we made a higher high, so we have a little swing low so far, but it is in jeopardy. And if we zoom down to like the weekly level, you can see, we've had a bad week across markets, but that bad week turned into a red week for the ratio chart. So not only was it red on the absolute chart, which we know about, everything is red. What that means is this week was a really bad week, but it was actually a worse week for the Stoxx 600 than it was for the S&P, which is generally not a good thing. And has the monthly gone red? So the monthly hasn't gone red yet, but it's starting to build that upper wick, so it is in danger. So we're going to continue to watch this. This could be a big change. Again, also because of the fundamental reasons, right? The hawkishness of the ECB. We can get into a situation where the ECB is materially more hawkish than the Fed. And so that puts pressure on Europe stocks versus US. So definitely a theme we'll be watching for. But we'll leave it at that. All markets are likely moving into weekly cycle decline now. And so we're going to have to watch to see where they bottom. Definitely take a look at the US video.